You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. Welcome to the show, Keith.
Jim, always a pleasure.
You said 1 week. What a difference. Explain the difference.
Oh, well, we've seen such pessimism in the energy sector over the last several months. I guess that July and August were just kind of brutal months where a lot of people just gave up hope and stocks plummeted. In September, we just kind of trundled along the bottom, and then last Friday, kaboom. I guess it was really the Fed announcement that said they weren't going to raise rates that kind of got this thing going. It took the market a couple of days to figure out what it wanted to do with that information, but basically, once this U.S. investors became convinced that higher interest rates were not coming forward, the U.S. dollar was going to come down, and after the big run it's had, and that just took, all commodities. Gold went up, oil went up, and once that trend started, Jim, holy moly, it was just, we've seen a fantastic run, both in oil and oil stocks in the last week.
Is there any one area that's been hot, or is it across the board?
Well, it has been across the board, but whenever this happens, the stocks that do the best are actually not the leading stocks because they haven't actually come down that much. It's the highly levered stocks, and there have been some huge fallen stars in the business. You look at a company like Baytex. They're listed on both Toronto and New York. Very well respected team, always traded at a premium, but they made a big acquisition right before the oil price collapse in 2014, and so they got their balance sheet full of debt, and that stock went from $50 to $5, in the last round. It actually got down to just under $4, and here it is, pretty much $6 today. It's up, 50% in the last week or so. Crescent Point, the big Canadian winner, same thing. They bottomed out here at $11 here. Only 6 weeks ago, here they are hitting $20 today. So it's been pretty remarkable. That stock was, $40 for years. And then in the States, it was even worse. Like, the big three plays in the U.S. are like the Permian in Texas, the Eagle Ford in Texas, and the Bakken in North Dakota. But the number 4 play is this thing in Colorado called the Wattenberg. And the leader of that play is a company called Bonanza Creek. And they've gone from $52 to $4 this year, but now they're already back up to $7. So actually, they hit $7.50 today. So you're seeing some monstrous percentage gains here in the low end of the spectrum.
Should you, if you're taking a look at stocks like this, take a look at how good they once used to be?
Great question. I would say yes and no. Like really, what you want to find is because what's changed here, Jim, is just the debt levels, right? The cash flows now no longer support these companies. So really, the properties are for a lot of these companies are worthless, and so because cash flow barely covers debt. So the game has changed so much. So to think back that any of these companies are going to return to their former glory, no way.
What is the hope then of investors, that they maintain where they are?
Well, I think that the big thing, Jim, is that for the highly levered stocks, you only want to have a short-term trade. These momentum swings come and go, and so like what I would told my subscribers was, look, off the low last Friday, expect a 3 to 5 day rally. So today's day 5. So what you want to do in these cases is, yeah, it does look like the sentiment has changed. The charts are telling us sentiment really has changed, but you don't really want to go out and buy those highly levered names unless there's a real change in things. You want to buy the more conservative stocks that have come down, that have way better balance sheets. You get to buy the leaders cheap. That's what happens here. And so obviously you're not buying them on the low, but you're still buying them pretty cheap historically, and they'll get rewarded the best.
We'll have more with Keith Schaefer right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Keith Schaefer. Keith, or I should say gasoline inventories up 8 times more than what was expected in this, of course, the slowdown of the driving season. Has that affected pricing?
Surprisingly not. Like, I think, like I'm looking at refinery stocks today, Jim, and they're mixed to up. So that didn't really impact much on the market at all. And I think what's happening really is that on a week-to-week basis, the street is putting less and less faith into the numbers. Everyone understands the EIA, the Energy Information Administration down in the U.S., the official supplier of data for the U.S. government. They're just guessing. So on refinery issues and gasoline issues, they do have true facts, but trying to extrapolate what that's going to mean in the future it's really become a mug's game right now. And so I don't think the street's just putting quite as much impetus on the day-to-day numbers or the week-to-week numbers. They're looking at kind of how it's happening seasonally, how it's comparing seasonally to what happened last year, and basically demand's still really strong. So that's the big news, is that demand is still really, really strong for gasoline. So I think that's really what's saving stocks today.
Well, I'm seeing more RVs on the road right now than I did over the summer.
Wow. You know what? It's true that, like I say, demand has really, really picked up and stayed up. So there's lots of stories out there where the American public is now really coming back to SUVs, RVs, the bigger trucks that they used to love before the '08 crash. So, I totally believe that's happening.
Shell has given up on drilling in the Arctic after investing $7 billion to do that. Is this going to be a long-term position with them, or just a fact that they're going to slow down because everything else is slowed down?
No, honestly, Jim, I think everybody in the world now is going to leave that alone for quite a while. The prize has the potential to be great, but costs up there are so high. So unless you're going to find an incredibly lucrative deposit, it just doesn't make sense. So what we're seeing here is I think they were the leader up there, and now they've just decided to pull back, and I don't think you're going to see any more drilling up there for a number of years.
Plus, the publicity has always been bad.
Yeah, I think groups like Shell are pretty used to that. I know when you look out on the Twitter and different social media, you see a lot of activity, but really I didn't see any greater serious information flow on that was so negative compared to like the normal stuff you see against fracking or, these issues, they come and go pretty quickly.
The fracking fields, there was thought that they would run out of oil quickly, but I think you mentioned to me earlier this year that just in the past year, they've become more than 25% more efficient.
Yes, and we saw that again this week where the U.S. production was up about 76,000 barrels, which is quite a lot, actually. So what we're seeing now is all these higher rig counts of the last 3 months before it started to fall off again. All that production is coming on stream now, so and it's coming on at lower cost. So the street is much more willing to get out there and try a few wells, see what the service costs are, which, that really adds up when you think about how many operators there are in the U.S.
Of course, they have competition, so their prices at the pump are lower. But yet, even in Canada, the lower prices, I think, have encouraged more driving here as well.
Yes. One thing that's happened here is our gasoline price has not gone down near as much as it has in the States. But what's going to happen here is that our gasoline price is not going to rise either near as much as it will in the States now, because our U.S. dollar, our Canadian dollar is getting better. It's going up with the price of oil. Like the loonie's gone up 5 or 6 cents against the U.S. dollar in the last week and a half. And I've already seen gasoline prices here in my hometown of Vancouver drop a nickel, and basically that's why. Gasoline has dropped a nickel while the price of oil has skyrocketed. That's
amazing, considering, too, that Vancouver does have the highest gasoline taxes in North America.
That's right. So, but that rising loonie makes a big difference on our gasoline prices.
Keith, anything else that you noticed this week?
Well, Jim, I guess really the markets are really at an important juncture here, in that the big boards, the Dow, the S&P, which are really the main stock markets of the world, have come down, and now they're moving back up, and they're in what we call no man's land between all their moving averages. But if the Dow and the S&P right now can get above their 50-day moving average, that's going to be a very bullish sign for the market. And I think we could see that should help take oil higher.
Keith, thanks a lot for chatting with us.
Jim, God bless you. Talk in a couple weeks.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.